What would happen if Facebook stock crashed to nothing? What if $500 billion worth of stock evaporated? What was once the biggest company in the world is now becoming an ancient memory. GE is a company that spans many territories, many fields, and industries. It's certainly not a one-trick pony, and this doesn't look good for other stocks, as the FANG stocks seem to be the only game in town. You came here for the truth, so let me unveil that for you. Today we are going to look at GE specifically. I want to show you what's happening with this stock and make you think about others. All right, so I'm going to make this as quick as I possibly can. Let's begin by taking a look at this article out of Bloomberg. GE's $500 billion market wipeout is like erasing Facebook. Think about that for a second. No, it didn't happen overnight. And no, the money didn't just evaporate. It didn't just go out in thin air. The money has moved elsewhere. But it just makes you think of the sheer size of this company and where it has gone. On August 28th, 2000, Apple's hottest product was a candy-colored computer. General Electric was worth $600 billion. So we forward ahead 18 years later, and things have really changed. Now they're talking about the CEO replacing him. They're making a big deal about it. I'll show you in just a second what that's all about. But I wanted to give you some perspective. What is $500 billion? The GDP of Belgium, the market value of Facebook, the combined market value of Boeing, 3M, and Honeywell, three major companies in the world today. That's the $500 billion that has been wiped away from GE stock over these years. Now you might think, well, that's a long time. It's a long time since then. Well, that's true. But take a look at this. The shares fell 45% in 2017 after cash flow shortages and weak sales in its power unit, among other factors. They've crashed another 35% so far this year. The decline earned the century-old company an unwelcome boot from the Dow Jones Industrial Average, leading to yet more selling. So it's been a compounded effect that has taken place. I just want to let you know that this is a company that's still a staple globally. We're talking about a company that has so many different industries that it's involved in, and it's a big player in all of those. In these articles here, it also talks about GE Capital and everything that happened with them. They lost out big time, but hey, at the same time, GE didn't have to pay any taxes after the financial crisis because of the losses that they have exposed to during the financial crisis. So it's not all necessarily bad news for GE. They're able to use this and use it to their advantage anyway. But the stock itself, wiping out $500 billion in this period of time, is quite significant, not just for the stock. Like, don't think of it just, okay, well, I'm just not going to invest in that stock and that's it. You have to think about what this means for other stocks as well. Are they going to be able to withstand different crises that will come up over time? You know, this is a company that has been a mainstay for such a long period of time. How many companies can you say that have been very big, very powerful for 100 years? There's not many. There was no Facebook. There was no Apple. And will they be relevant in 100 years from now? So that's the questions that you got to think of. And of course, not just for what you want to buy today. A lot of people just think, well, I don't care. I'm owning the stock. It's fine. I don't care. I'll sell it if it's not good anymore. And other foolishness. We're talking about this from a macro level. We got to look at this not just because of what you want to buy and what you want to short today. We want to know what's going on. We want to understand it. We don't just want to buy and trade like some amateur trader here. This is not what this game is about, okay? GE shares soar as much as 16% after fallen blue chip dumps Flannery as the CEO. So they get rid of the CEO and the stock jumps 16%, as if that's the reason why there's a problem. And this right here is just taking advantage of a situation. They could have replaced the CEO with a ham sandwich, and it probably would have done the same thing. GE is going to have this $23 billion non-cash charge for its struggling power business. The company said it expects to fall short of previously indicated guidance for free cash flow and earnings per share for 2018. Now think about this. They said we're not going to do well, and the stock jumps by 16%. How in the world does that make any sense at all? Usually, it's because they missed their whole estimations, what everyone thinks that they'll do. They, fall below that, and then suddenly you have this stock declining. Or they exceed the expectations, stock increases. In this case here, they said, we're going to do really bad. We're losing a lot of money. We're getting rid of the CEO. And then the stock jumped 16%. Well, if I look at it at the time of this recording, it's up about 11%. But I wanted to show you here over the last 5 years how poorly the stock has performed. It was basically trading within a range for the longest period of time. This is showing us from 2013 up until today. But essentially, you could see it's really not moving. But when you look at it from, for example, year to date, the stock has declined considerably. I mean, we're looking at this about $12 or so, and this has been just weakening over and over again. I wonder if I look at the max, you can see, I mean, we're moving back into levels we hadn't been at since, if I could try to get that, 1996. The stock was at this level in 1996. Of course, there's many factors. You can't just relate it like that on a linear level. But anyway, I just wanted to show you this and to make you understand what the power of one company has, how many industries they can be in, and they can still struggle considerably, wiping out a massive quantity of their market cap, which, by the way, today, right now, as of this recording, is sitting at about $110 billion. So I think it's really important to see that. Now, looking back in the year 2010, General Electric, why the world's largest company still has spark. And they're talking about this. I just wanted to show you how things really change. I mean, 2010 wasn't that long ago. I know that some people are just getting into this and they're not aware of the history and everything. But this is something that, that we need to always be looking into. Every single day, you need to be reading the news. You need to be understanding. Then you have to go every day, read the history. Always, always, always be paying attention to what happened historically and then connect the dots. If you found this video informative, please give me a thumbs up. When you give me a thumbs up, it helps to support the channel. And of course, if you want the financial education you were not taught in schools, if you want to know the history, if you want to know the information that's going to empower you, you're not going to get that from school. You're not going to get that from your economics textbooks. Trust me. This is where you want to begin. And this is the foundational principles. You're going to get that in here in the Money GPS. And then I filled in the blanks with global economic collapse. You can check that out at the link in the description of the video. If you're more interested in the audiobook version, you can get that at themoneygps.com.